it's 5 after 10 o'clock at night, and it's almost the end of the year, and I'm detecting a little bit of a rally coming. Well, already 20 pips in uh, 2 hours, 1 hour. We're supposed to hold the bears under this um, triple bottom here, support. And I guess this is the disturbing thing. People are expecting this to be support every time it comes here. And we have to be aware of the fact that there's this deeper low. And you want to be a buyer in this 50 pip window. Because that there is a high probability trade setup, which is already set up. Way back here, the setup's already been established. The further forward you can carry that, the more tickets you need to put in. So here, you could have scalped all this so-called noise that people are trying to avoid. There's great trades in there. Every 4 hours, there's a trade available, possibly. So just in the stupidest sense of forget the line, just look at the range and say, do I have a trade plan for a small range? And yeah, maybe it's not the best. There's no glorious target in it, but look at the expansion of the drama of the next candle. That's the key. Like here, we're not doing anything and then just starts to melt. Once it takes this out, sure, you could say, I think I'm going to take profits because there could be buyers there that are going to scoop that up and then dump it here into these rooftops. You know, this, oh shit, it's moving stuff. Software update's a little rough on here. So, they updated it somehow. I was able to grab that whole piece. I don't know. But, so the trade plan that you would use during a point where the market is doing nothing, it's very difficult to do. But if you go to the daily now, for the people that have swallowed the no-nonsense pill, their view is, hey, if there's no volume, we don't trade, which is kind of like silly because they should have a trade plan for when there is no volume. The extreme is the issue. It's not whether there's volume or no volume, or whether there's a little bit of volume or a lot of volume. It's the fact that market hasn't gone anywhere. We can assume the volume's low because nothing's able to move it around. Obviously, this is the obvious thing. Once it's moving, what do you do about it, right? So unless you're going to go to the 1-minute chart and justify an entry based on a pullback of some type of metric that you discover to be the Holy Grail, even at that, right? So it's really about saying, I'm going to swing trade it, I'm going to trend trade it, and I'm going to say, yeah, by the end of the year, this thing's going to crush. Now, as far as my launching point, what I'm saying is that there'll be a reckoning at the end of the year. There'll be an exclamation point to the market. And I do believe it's going to be taking out the high of, like it's going to go up 60 pips here in 4 hours. And then it's going to, or maybe it's going to take 12 hours. But at the end of Friday's kind of it. There's 2 days left. People will execute on Monday and Tuesday and just let it go. And then just make like 100 pips very quickly into the end of the year because it's the stampede. The clock's running out. And this whole thing with, Bitcoin is sitting at this critical level. It survived the 6,900, and people were like, because who wouldn't want to buy it at 3,000 and ride it back to 5,000 or whatever your kind of number is? And really, it's about how big you're in these trades again. Because you can be in a very small trade and make quite a bit of money if you're in a market that moves a lot of pips. That's completely different than loading the wagon on the euro dollar just to make 8 pips or $800 is different, right? I mean, just step in front of these other markets, that same amount of margin going, it'd be fatal, right? I mean, well, it could be a pure genius move, especially if you spent the extra money and spent it on a non-directional system, which has more guarantee of winning, but people can't take the credit for picking the direction, what's going to happen. So when we had this massive sell-off here, this was a buy signal to me, and this was a classic Friday sell-off. It was different than the other sell-offs on Friday because it was a very we knew there was a hole there, and we suspected that if the cave's in, there's a cave in because it's cantilevered out too far. We got this triangle out of space here. It's very fragile, and I'm expecting to clean house to here, and it never happens. And if I was to trade this on a confirmation entry, I wouldn't get too hurt. I would only get filled here. One fake breakout here, I would say if you were going to enter on a confirmation basis, a trailing buy stop, some dumb shit thing like that, maybe a buy stop here, no fill. A little trap here, but then you had your backup plan, and if you were to trade non-directionally here, where you just don't care, you're just like, oh yeah, we're just going to bracket that. We're just going to keep coming in at tighter and tighter orders here. We want to make these things, you're just stacking up tickets, and sure, a little trap there on some of it, and then plunge, but it still doesn't mean you can sit there forever, because right now you're underwater if you did not get out of that trade. So I suspect there's going to be this massive, even more of a massive run, because we rejected this floor here where everybody was going to get in. So this kind of didn't really work out, So people were banking on a lot of stuff here. The guy that got in here in the breakout, he had the best trade plan you could possibly have there, and the non-directional systems killed it all the way down to here. Then, the people that buy here really are looking to get out at this new, at this old low here, right? And they never get their trade, it never makes it back there. And they're like, shit. But when I saw this other sell-off where they just hit this, I was already hoping this was going to be the double bottom here. So I bought all 3 bottoms, but I bought more on this pullback. And then when it started to take off, I actually chased it. This one here, and then I saw, they're going to pull back one more time here because we still don't have enough people on the train, and we're probably going to reject this floor. And we did, and we only got one pullback out of the ricochet off this floor. I thought, well, the scalpers are out now. Anybody that was accumulating down here dumped everything up here. And you got this barely a pullback. And I thought, oh, here you go. Coming back to test this top in time. And then you're off. And then you're just going to start cleaning house. Now we have to go through all this stuff here. But I figured by the end of the year, we will be at 11.19 or better. And that's my plan for the end of the year. So got in pretty heavy here, I must say. This triangle resolves in a, so, you know, for the people that say, well, the pattern, what's the pattern that everybody's kind of looking at here is, well, this is a triangle that breaks down, like it does resolve, like it can't just go sideways forever, and the pressure couldn't be relieved either direction. And then it's just like, wow. Now, as it hits this and this and this, ultimately, I think they just barely nicked this price. But if you could afford to buy here, then you would just put in big tickets down here. And you just have to keep refreshing this area. Because when this is down hard, you know that's a market order. You can see, oh, it's down 50 pips. That's just a no-brainer. That is like dumb shit. Total winning system where you just sell because it's up. If it's up really big, you sell with a really wide stop. If it's down really big, you buy with a really wide stop. And it's a high probability exit, you know, up to here. So now I'm looking for the sweep. And the trend line guys have already got their trend line broke here. Came back. It didn't matter. To me, it was the auction in here. Come into this hole. Accumulation on the floor. And now you're going to jump the creek back to here. Now we got to go after all this real estate up here that we left behind and more. And this would be your, see, now you couldn't put a trend line on that because this whole channel, that story is over. There's an Andrews pitchfork, I'm sure. If you wanted to trade off of that, yeah, you could have done all those trades. You still would have had to worry about, okay, where's your exit going to be? You know, when you come back, flying back out of that thing. If you bought here, where was your best place to get out? Here, you know, if you bought here, your best place to get out would have been there. In a counter move and selling into this, you know, you can make all these kind of assessments, you know. But at the moment, we're coming after this thing, this pocket, right? And just the way we come into this pocket's going to mean everything. This hole right here. So we have this left behind, this story, and then this shit, then look the fuck out because they're going to come after all that shit, all the way to the top, and they're going to blow it out. They're gonna. No, this is my dream I had. So, bad dream. So this was the low of all lows. And yes, the sellers came in, they pull it back, but oh boy, look out. So the hunt is on for the bear stops. And I would say the early entry guys and even the inside Williams fractal people went long here on taking out this top. Let's hope. Let's hope they thought about that idea. So this is your little Williams fractal. Here's another one. So you could say Williams was right because when you took out this one has fractals. This maybe not. Here's one like this. Just bullshit. 5-bar turnaround. 5 or 3. How depends how active a trader you're going to be. If you're a super active trader, you're going to be like, oh yeah, we're buying this bottom here. Sure you overshot by a few pips, but I mean, how picky are you going to be? I mean, I'm just spreading it all over there. I'm just going to say, let's just do this, and just be a bunch of tickets to smooth out the risk. So here it's on, man. The hunt is on. I mean, forget these bears. I gotta move my targets up even. I feel like holding this trade, I swear to God, till the end of the year. Now we could close out, climaxing into the end of the year here and get pause, and we could come back. It doesn't matter for me. It's about this insane completion of the last known trend on the daily, which is up. So if you go to the daily charts, and this should be a real easy one for the, if you're going to fade no nonsense, you're going to be, when he gets confirmation, you're going to go against him. And that's going to be, it's like a scalp swing. Of course, you know, he just did a video where he says, yeah, this year wasn't that great. You know, he didn't tweak it enough, and he's going to go looking for another 2,000 indicators. So pretty amazing, ambitious guy. We just need more indicators. You know, honey, you just need another dress. You're really good look. No, you really don't look bad at all. I can almost, no, you look fine. It's just that we could get you some more clothes. Let's go to the store. Yeah, we just need a few more indicators. You'll be fine. So I put my targets real greedy up here. I'm sitting up near the highs of the... So this thing's going to come back and just crush people. They have no idea. They won't know what happened to them. Once you take out this Williams fractal here, then you take out this one, then this one, then this one. And here you're only going back to the high of the year. So that was the cycle, just a good old-fashioned cycle here. Now there's a giant wick here. Granted, there's a giant wick here, but that's the end of the year shenanigans. I'm expecting... I really want to close in this pocket here. Anything above here, and you're trapped in that, that's the next pool you'll be trapped in, even if it never goes anywhere. So like these kind of moves here where you just go down, 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 and people are just amazed at this velocity. It's just stunning, and you have to be willing to buy into that with a wide stop, because you have to go, oh, that's not going to keep going like that. And you would be wrong for about 2 bars here. At least if you bought this one and your limits start here, then you buy real heavy here. So for 2 days, you buy here and there. Holy shit. And you're surviving this 100 pip wick. In other words, if you bought at the end of the month and then they went lower and you weren't prepared for that. So this I could imagine doing this on a single level, like a single tier, where you always traded the same size. You kind of have to go with what the market's letting you do, because it's so dead right now. But it's such a perfect setup when it's dead, because it's revealing the failure of one side or the other, or both sides to push the ball either up or down. So yeah, this is the manipulated euro dollar too. So this is quite a story here. Now on the daily, you can see how you could make more money if you just traded to make 50 to 100 pips than if you tried to make projections of, oh, where this thing's going to go, or even wait for a filter from some silly smoothed out range machine. Anything that takes away the detail of just the obvious plunges and rallies, in relationship to the price that hasn't been realized yet. So it's undiscovered country, so to speak. But once it's discovered, it gets rediscovered. So that's why I don't think it makes sense. Because if it was okay at this price, like when everybody took it up to here and everybody agreed, oh, that's a great price. But see, once there was so much agreement there, it came all the way back, and you would think, well, but what was wrong with this price? Everybody seemed to agree that this was a good price. So the logic is not there. People would say, well, I don't get it. Like, we just went from here to here, came back halfway, went away again, came back, and came all the way back to here. So what was the point of that? Like, what are these guys retarded? Like, well, you didn't like that. Oh, but this, but then when it came to here, this was this other price, this middle low here, and people were like, wow, Jesus. And so all this ranging's going on, right? And these are somehow the tea leaves here for the algo crowd is that, they had built some baseline that kind of runs, like, even if a perfect baseline could just kind of be like this or something. Like your idealistic baseline looks like, oh, fuck, this thing captures every trade. What are you talking about? It's amazing. So think about, and right here, to me, this has got to be the most kind of obvious entry on the daily, because think about people who have stops on the daily and how bone crushing it would be to be stopped out of this thing when it's going up. And I'm only saying that from I can make the argument that we were inside this trend line. In fact, we never even tested this trend line here. I could also say, well, I could say that this top was a big deal price. It always, once you got above it here, and of course here people kind of got in thinking, oh, well, this fucking price rules, I think this one is the ultimate, is this top right here, this top inside the bottom. You don't always come down that deep, but if you ever do, that's a great place to get in. Like this top here, so this doji area here carried forward. Yeah, this is pretty ripe, and that was where we got that ricochet into it. This is the daily. And this little baby ricochet is, yeah, sure, maybe there's a guy with an algo that squeezed the last sell out of this because it's the only rally in this down move. This is the only rally. And he's, oh, dude, my system, it made at least 40 pips, and it was right. What else? So now we have, since we had this non-directional winning trade too here, buyers coming in just by the sheer fact that you have been doing nothing for 2 days. And it's really a fizzled out kind of, so my rule is that if it's down 50 pips in one day, I'm definitely going to buy with a 50 pip stop here. If it's down 100 pips in one day or 2 days, I'm buying with a 100 pip stop here. This is a rule of thumb. Or I'll buy here with a 30 pip stop. I'll have stops come in like this. I'm just going to go with what's happening. On the 4 hour, this is a very complicated, drawn out triple bottom. Here, it's just a one and done, like falls out, scoops out all these very careful traders that are over managing their risk. So any robot that's going to over manage the risk is going to keep getting stopped out. So from the zoomed in daily, so zooming in is a whole nother thing too. One level of zoom in is a whole different world. So here it looks like my exits are a little bit too tight. I should move these things here. See if I can tug these up a little bit. Because I think we could go up here, so. Oh, jeez. Well, it's not going to let me. It's a big drama. So, move it on my other unit. But as we come up here, I think this could be a very quick and dirty session. Take off this high, this high. We're going to take these out like a zipper, these 4 days here. 4 days in the past. So we already took these guys out. This is the bottom that's supposed to become a top. I don't think so. So if you have even a 20 EMA, okay, a 20 EMA guys are like, yeah, we're buying that. 20 EMA on the daily. Forget about all that. Oh, the ATR. You can't put a filter on that stuff. You're like the guy that sends the tapes in for some guy to mix and you've already compressed the shit out of it. It's like, you kidding me? That's where all the fucking shit's at. Where it's going down here, like the no-nonsense guys. I don't get it. The support and resistance, I don't get it. Where are you supposed to get in? I don't get it. What's going on there? You just, what? Auction? What are you, fucking a farmer? What are you doing there, son? You know, we don't talk like that. We talk indies and indicators. No nonsense guys like, yeah, it's been a pretty rough year. That's why I've got other gigs, people. It's been a rough year for trading there. I couldn't make sense of the markets this time. I almost had to get my kids, had to take them out of school. They're in a fancy school. It's been tough times. Got ICTs over at my place now. He's picking me up. He's an Uber driver now. Had to sell his castle. When he misquoted his exit on the Bitcoin, he would just take profit too tight. So here we are in the old euro dollar. So funny, after all this belly aching by the Brits, the euro's gonna just kind of emerge triumphantly and break the trend line that's been going on for 2 years, 3 years. Be like, people, geez, step aside, look out, Mr. Euro. There goes the dollar. Why do you think they're putting all that money in the bank? And gold's taking off finally. God, it's going to be a real blistering climax. And then, of course, it's just going to be quite interesting. I do wonder if the stock market is going to also climax at the end here. And it's going to be like, well, it can only go down from here, you know. People are going to be very a round number about it. And they're going to say, well, let's just stay in that trade. And that, like I said, if you're a long-term trader, something's going to give here. Really, Bitcoin's still a fucking viable thing at 7,000, right around $6,500 for an instrument that you have no idea. It's like buying some shitty guitar that Elvis played or some shit. Well, it's worth so much, you know. I mean, Elvis played it. I know, whatever. So it doesn't sound any better than the other guitars, better sounding guitars. Well, it's not about the sound. Oh, it's not? So that's no consideration. Why would you even be trading this shit? Why would you bother with all this shit and these fucking Gartley patterns that people got their brains into and the Fibonacci's? Because you think, well, that's just going to be like easy money. But then it turns out it's a pain in the ass because you've got to move your take profits. And sometimes if you move them, I almost feel like if I move my take profit, it means that there's another pullback coming. So if I'm going to buy 3 pullbacks or 3 sideways, if I buy 3 plunges, it's you have to go run a wider stop than if you buy 3 chops, 3 noise chops, because then you can say, oh, I'll just keep putting that same stupid ass 8 pip stop in there. And you're kind of at the mercy of the velocity of the market. So if you do have your 8 pip take profits and your 16 pips and your 20s and your 22s and everything in between, every time the market does some spaz move that's even, could be non-directional, as long as you're not oversized per day per event, then at least you're making some kind of money. If you have your tickets super deep in the market, then you're under trading and you're probably not making a ton of money, but you haven't blown up your account. So for some people, that's very disturbing. For some people, if they're making 20% on $1,000, they consider that to be every month to be amazing. And they'd be happy with that. So it really depends what you'd want to do. I think if you start to go really big on one account, the problem is that, or in one currency pair, if you think you can juggle 2, because that's a different price pulse, right? It's going against, maybe in some regards, it's going with or against the current trade you're in. And since I built a lot of buy buttons, it's kind of, I can't just come in with the symmetrical sell on the other instrument. And then if I do that, I don't have enough allowance for the market to go spastic and do a mini spike into a shallow bank of tickets. I mean, I could, but then I can't really keep track of my performance because I don't know where my wins are coming from exactly if it's all in one account. So keeping it simple, if you just got into one instrument, so you're sitting there and you buy the Australian dollar with a 50 pip stop as your first trade and you just don't care, you could lose $5 on this. And you'll just live with that trade all week. Whether it goes up or down, you waiting for them to stop you out and lose $5. So you have to be able to hold on to a bad trade. Because if it's not a lot of money, then it shouldn't matter. If you're risking $5 a month or $50 a month, I mean, for some people, that's a phone bill or something. And you just said, well, I'm just going to let that thing go. I'm just not going to worry about it. That's different than if you are going to trade and risk $50 a week and you're like, oh, no, I want to pay attention. So what's worth paying attention to? $50 a day, $50 a week, $16,000 a day. What's worth paying attention to? I do think it's this tolerance of also tolerating being, when the market's going in your favor, of having an objective view of the trade. Kind of tough if you're, if it's so important that the trade does work out. Of course, if you can't see the forest for the trees, if you can't go to the daily chart and say, oh, my trade looks great on the daily if I was going to hold this for the next 2 days. When the market's going sideways for 2 days, to me, that's obvious breakout opportunity. I want to get it before the breakout, or I want to get something going in what I think is going to happen. But even if I'm wrong, I could scalp out a partial, move of that. Something. So right now, because it's a lazy market, because there's nobody trading it, and that sell-off was kind of on, maybe it was a low volume. People would say, oh, well, that's why we got in low volume. Probably was kind of low. It wasn't enough to make it keep tanking. It wasn't the first leg of a tour. And because it sold off so fast and so hard, it was a fake move again. And at the end of 4 hours, you're just, we're getting in. So on Friday, I get into this thing and my broker doesn't open till like 8 hours after the other broker. And I thought, oh, this would be great. We're already almost back to the round number. I'm just going to sit through this thing and we're all done. Now, of course, I have to come back one more time. And now I think it's clear sailing. So I'm holding this to the end of the year or until, I'd really like to hold it till the end of next year, honestly. But I'm going to have to tap out at some point here. I think as soon as we take out the high on this big wick at the round number. So I'm looking for 100 pips here and beyond. And I'll move up my, I'll probably get greedy on this one like I did in the last one. When we came up here, I got out. So that was my big exit was to get out up on these tops here. This was the old Brexit event. Which, by the way, the pound came all the way back to the starting gate, too, on that one. Kind of funny how it just didn't matter. You know, there were sellers up here, and that's all there was to it, and that's what made the market come all the way back down, because there were so many people that sold up here, they really didn't let go of their sells till their money management system started to take them out and create buy orders, which fuels this move here. So this drama plays out quite a bit on the daily chart. I didn't know why you'd want to get rid of this beautiful scenario where you see this low get just punished. They take this out and they just crush all the way to the round number and then all the way back. So you had to be willing to buy here at this 100-yard line without actually caring about anything other than the fact this is the 100-yard line. And even if this doesn't mean anything, you still know that from here to here is 50 pips, and it's almost 100 to here. It's just easy to get to the math in the trade. So you can make $1,000, you know. So you're a standard lot, you make $1,000. It takes you 4 days. Or I guess you didn't have to wait that long, 3 days. If you bought here and you held it, here it's up big. A lot of people are selling. But then finally here you get tagged. It's coming into this window here, so a lot of sellers. Enough to pull back 50. And then big stampede. So here you had to wait 2 days and ride this vicious pullback. I'm sure this was a buying opportunity for trend traders because it barely pulls back. Of course, that was the end of that hammer. That was the Brexit thing. So, you know, you probably would have wanted to be long. So this is where I buy here is this big smash down. And I think this is the last of it. This is the big deal price. This is supposed to be a resistance, and then sure, there'll be sellers here. So maybe we go flat here. Now that's the other option, is you go flat in all your tickets right here, and then you just start putting in limits like this and rebuild a 50 pip plunge. So if you do that, say that when the market gets up here, you've made enough money where you think, you know what, this window here is definitely the next trap window. You're like, yeah, you know what? If it's Friday, I'm probably going to get out here. I don't think I'm going to sit in there for the weekend to have them come up and tag this. Now, that's a complete discretionary exit. The exit's just as big a deal as the entrance at this point if you're going to trade like that. So you could say, oh, yeah, I got my targets there, but there's going to be this, unless you can go smashing up there, right? It's got to run away for maybe today we make it to this. So if you held through that, it's going to go. But I'm kind of counting for the end of the world today. I don't know, I'm just looking for a stampede. I'd prefer them to just hit it to here and be like, oh, yeah, Friday. Like on a Friday, they're taking this out. Yeah, I could see that. People are like, what the fuck is going on? Like that thing, it just can't go. It can though. And it does. Like, I'm sure people were astounded here. Of course, there was definitely some pressure building up here. It's getting very tentative, very tight. People were getting very, it's a big flag here for everybody. Well, flag for the, it's supposed to be the bear flag that when it breaks out of here, you know, this is the first breakout, it just keeps tanking, but So it's a total trap for these guys. And meanwhile, this pressure here has been building up. So the first blowout, and then, yes, of course, sellers up here. The last crush here now. We got to go after this spot here. Okay, sellers are coming in already. So it's right up on this wedge here on the 4 hour. So there's this little wedged part here we're coming up on right now. Sneaking up on this thing. So this could create some fuel here, depending on how it hits these wicks here. But I prefer this all to happen very quickly. So that's the problem. I think in my mind's eye, I'm like, oh yeah, once we hit this pocket, yeah, there'll be mega sellers here at the 50. You got to believe it. This was also the apex of the beginning of this first leg down. It's spilled into here, and of course this is another buyer's delight for a nice little bounce. Not a big trade, and this is the one that I think really trapped the end of the day confirmation down. People would say, well, I got a baseline that's out here, and that just confirms to me it's going down. I sold here. This is the 50 period moving average. It's more reliable than 20. Right, because this is a bigger baseline that's out in space. It's supposed to be more of a major trend, which is so silly. I mean, because look at all these insane price pulses that have nothing to do with a trend. You know, I mean, what is the trend up? Now the trend's down. Really? Come on, be silly. Well, yeah, you don't understand. This is uptrend. This is downtrend. Okay, so it turns on a. Yeah, but then there's got to be somebody that's saying no. This is the trend. The trend is like vicious. So sellers have to be up in here. But you have to be willing to ride this price pulse here. Then it just kind of comes here, dicks around. Maybe it comes back here. Maybe it goes here. It's going to be quite the not straight line. Unfortunately, in my dreams, it goes like this. But of course, it's not going to, okay, this one, you could say, yeah, look at this move. I mean, this is just like, you are done. How quickly you made that money. They come back to this double top. It just comes smashing back. In fact, the next 4 hours, it still revisits that area, then ripping up. Amazing. It's just these pockets being filled. I don't think it has anything to do, because look at this top. It's a 4 hour chart. You come back into here. You got to be ready to buy there. You got to have your pendings in. Now I just want to see you go after all this stuff. I don't even want to have to think about this trade anymore. Because scalping here, pad the account, build a long position or a short position. Because even your shorts here, if you would have sold every rally after this big price pulse down, you could have done this. Okay, so it's down. You're just like, oh, it's a downtrend. Don't sell here, but sell here and sell here. Okay, so you made this money to here. And then you sold here, so you made a little bit of money there, and you're selling now. But you have to be careful, because selling into what could possibly be like shearing off of all these wicks, unless there can be enough people selling in this pocket here to kill the whole thing and just have it dilly-dally, and then it's going to maybe come back to this top here. Or it's going to go after my buy limits that I would just rinse and repeat and put more buy limits here all over again, all the way down for that. I'm just going to get at the end of the, if you think this is the channel, you would getting in at the end of that, right? You're either going to buy low or sell high. It's just how far out are you going to put your sells here? Now, if you start moving your sells up, you're never going to get filled on your limits, which is good, because the point is that you're going to keep on like a bullfighter. You can putting out in front, right? So your next sell limit's here, cancel, replace, cancel, replace. It's not really cancel. It's just cancel these early ones, cancel themselves. If these only last for 1 hour to 8 hours here, then the big all day long, all week long sells are up here. And next year, for the bears, selling way up in the ozone there is going to be the ultimate strategy. You're going to think about selling up here at this. Anything above this top here was going to be your premium sell zone, right? And if I move my targets, if I stay in this trade for the next whatever, you could say, yeah, well, you could just keep moving these. But I just don't really like to be in trades that long. Like if they move like this fast, and I start cashing out above here, that's fine. That's still 60 pips there. And if I wait till they tag this, yeah, that's the ultimate exit, because that is that high where everybody's selling. So we got a trend line. We're above this, of course, and also the big deal is that the volatility's been drying up. And right now you're in this triangle here, so you kind of got this space to either weasel around here, or we're going to spill back in. And here's where the obvious trade is to buy here, buy more here, and buy everything in the world here, because it's always going to be like that. Sell here, sell everything you own, and sell everything your neighbor owns. Go get a mortgage on his house without him knowing it. And then just like, you go, hey man, it's all right. I made all this money. I know what you did wasn't right though. You shouldn't have forged my name. And look at all the money we made. Shut the fuck up. God, can't even help people out. My mafia deals are just, people are, God, man, try to loosen up, making you money. So, yeah, they got all these, so they're going after all these YouTube people now. It's pretty interesting. All the people that are trying to make money on YouTube. That's why I never signed up for that. I thought that was kind of like really pushing it. Yeah, you got to, because I guess if you're selling something like practical cookware or something, I don't even know what people are doing. I was looking at synthesizers on there. These people are demoing these synths. Some of these people are just amazing, I mean, the people that demo stuff are just better than most famous people. You should hear the shit people are doing on YouTube. So here we're in this just slow creeper gear market, which, yeah, the probability of this trade is very high because it's such an obvious pattern. It's boringly obvious. Whereas a big fast move is kind of like people are like, well, did Trump tweet or something? No, he didn't. Even if he tweeted, it has nothing to do. Just because the sun is coming up like in your window doesn't mean that, you know, the farmers are out planting. These things aren't correlated. Yeah. Well, don't you know what? They were watering the fields today. So, yeah, I know. That's right. That's what happened. So we're waiting for this drama to play out here in the Euro, and then we're all going to do a reset. And there'll be all the numbers crunching at the end of the year to see who made money, and so who can have a good bookkeeping day. So it looks like they're going to close the books on this one. And I don't know, man, the next 10 years is going to be something else. This is the 10-year deal. This is the decade end. Also, that's a big cycle for people, or cycle people. The old end of the decade. Yeah, it's definitely amazing, you know. All these people doing all these. So this guy sent me this. Oh God, I can't remember his name. Some guy. He's on TV and stuff. He sent me his webinar, and he's like, I think I did a video about him. He's got all these pictures, or he was on one of our streams. He's got all these pictures of him pointing arrows, and you know, all these trigger kind of psychological trigger things about losing money and stuff like that. And granted, I mean, you got to have some sense of humor. You're going to lose some money. Like, just getting in, just the fact that you're going to, even after you make money, you're still going to lose because they're going to charge you a fee to get out, you know, the trade. Plus, they're charging you the spread and commissions, you know. So you really are, it's like, you know, you're spending money just to have a foothold in. So instead of paying desk fees, you're already paying. I mean, isn't that enough? But I know people want to just ride the ship of like some pile of money. But yeah, you guys, you could. I don't know if they would. I guess it doesn't matter what you show up at this prop firm with. You could show up with my system. I could just trade this in a different sizing or however they're allowed to trade it. But I couldn't say, well, it's like a scanner system. It's not an algorithm, I don't think. It's just, you're just going to have to roll with the punches kind of trading. There's nothing you could do about these trades, okay? If you're in it and you lost money, so people are saying, well, what do you do when the market's just going one way? Yeah, that's tough because unless you got a trade plan for that, yeah, you're fucked. Okay, so we get another wave of, it's just before the top of the hour, so we'll get another wave of buying here. It's really difficult, I think, when the market's just going hell bent in one direction. It's pretty ugly. So, yeah, what do you do about that? There's really nothing you do about that. I guess just buy better beer or something, you know, just find a better, higher quality drug dealer. Okay. So YouTube wanted me to designate whether or not kids were going to watch. Kids, if you're having a hard time, you just need higher quality drugs. Just a better batch. You just need a higher quality batch. It's about the batch. It's not about the drug. It's like a steak, you know, with salmonella. You try to get the ones without. So we broke out, man. We're on a run. We're gonna go bear hunting. So I'm expecting this to happen pretty harshly on the top of this window here. 4-hour hunt is on, coming after that. But yeah, it's going to be a great end of the year. And then look out, because either the stocks are going to climax at the end of the year and people are going to go, yeah, it's time to take profits, and then we'll drift for 4 years down the consolidation after, because there's a saturation point for anything. And maybe, I don't think it has to be locked into the end of the year, but there is this kind of, people reconcile their books, and whatever's really on the books, you're going to find out. Of course, as gold goes after 1500 and then maybe 1575, close at 1600, people will be freaking out. Now that's when people will think inflation, because they're going to notice. So inflation started about, I don't know where you live, but where I live, it started like 2 months ago. And I was like, God, they raised the price of that? Like, boy, they didn't just raise it a little bit. They raised it a lot. So it depends what sector, though. It's also about the sector rotation, because, if gold goes to 2000, then it kind of sets a different level for other stuff, and other stuff might go on sale. So every time a computer goes on sale, that's like an amazing thing. And the computer sale thing is just, the computer's like free. It's a free unit practically. It's like the bicycle you pick up and ride, then park it. The ones people are stealing and stuff. People can't resist that free stuff. So yeah, a lot of people don't like it, I don't think, though. I think the rich people want to be caught using free stuff. I don't know. Yeah, it's coupon clippers. The rich people I know, they're just like the cheapest fucking people in the world, man. They're just ridiculously cheap. I mean, they put a new fucking spin. Of course, in certain categories, like, so if they have a car, say, some high-end car, but then when it comes down to stuff like I'm not paying 15 cents for that. That's what they think. How dare they charge 15 cents? They're charging for that? Oh, Jesus, 15? So the end of the year is here finally. It's about time, people. So funny. Watching all these antics with this fucking, the guy in Britain. What a hero. The Trump clone. He's like, yeah, it's going to be all right, man. And the guy here, we got a guy here named Jim Biden or something. He's like, yeah, what we're going to do here is we're going to get rid of all the, like, where you working at? We ain't going to have that no more. He's overheating the planet, son, making all that money and stuff. Wait, they're going to come after you fucking traitors. Yeah, they're pressing them buttons. You know how much heat that creates in the summertime? That's another reason why I kind of went off the grid here on these tablets, because my big computer in the summertime is just, man, it's hotter than shit. This computer's just ready to, well, it did, and imploded. These power supplies, they're not designed to go past anything past 75 degrees. I just drove it right off a cliff. Hell yeah, I've burned up a few computers, I must say, but that's another one of those costs of doing business, I suppose. All the gear and all the wattage and all the people spending money on Reuters feeds because they want to know exactly what's going on. I guess if it's helping you make a better decision, then go for it. But to me, I can't figure out if, I don't know what, another thing No Nonsense said that was completely harebrained is that they're saying, oh yeah, they're using these keyword algorithms now to trade the market. Who's doing that? Oh, so let me guess. Trump says X. That means X. Come on. Ridiculous. That doesn't tell you how much the market's going to go up. This does. When you look at the structure, it tells you how far it can stretch, how deep the market can go. It says right there on the fucking structure. The news isn't telling you that. Even if you knew that Brexit vote, even if you knew that, it's as if the chart just knew it all. I mean, all those entries are just so obvious. So, I don't know what this think's all about. People trying to, but I guess people want to think they can, I don't know, build a smart car. Okay, well, you're going to kill some people. Sorry, you're going to make it there. We can't say it's the best way to go. But, yeah, high probability trading, I think, is combined with the right sizing. And even if you're wrong, I said, if you just put on a trade with a 100 pip stop and say, I'm risking $10, I'm just going to deal with it. Whatever you decide is enough pain. Or enough pleasure. Because, maybe you make $1,000 a week and you're risking $1,000 a week. But you're right, like 80% of the time, it's totally possible to be that person. Yeah, I know I could lose 1,000, but I'm making 1,000 every week. So, in the simplest kind of break even, I'm a really good trader world. Yeah, sure, why not? Of course, you probably are doing things that make a lot of sense, and they would have to have a hit rate like that. Even if you got stopped out of something, as long as you're accepting the dollar risk, who cares? In other words, you could lose, the ones you lose 20% on are very big pip range trades. So, but you're right on the scalps. So you're making a lot of money from scalping because it's easier to predict a 15 pip move than a 50 pip move. And the swing trades that you do that maybe you're holding through the whole month. So if you imagine you were scalping 3 days a week just by, I guess, swing scalping, like, hey, it's like so oversold. Let's just buy some for a 20 pip obvious bounce. Compared to, and this would be as if you were doing this, put on a straddle or a hedge and wait for the market to explode and just cash out and be like, that's it. I just made money. But it's a different style of making money because if you were to not be in the position, wait for it to explode into a range, and you capturing that price on a limit is completely different than you're in it as it explodes into that hole that there's people that are willing to take it the other way there. And the way it responds to that area, you could watch that, but that's another way to trade at the market because as you're watching it unfold, you can gauge it. And then you have to have a little bit tighter stops, right? Because if you're going to start to dial into really gentle moves, looking for a break out of that smaller fractal. Now, the closer you get to that, the more the spread's a problem. So the big grandiose moves, where the market slams down into an area and then sweeps out, and it's huge in golf, right? That's the glorious swing trade that's kind of like 3 days of pure bliss. 1 day pullback, 3-day run, say. Shallow pullback, all the trend traders are in, it's very obvious. Everybody's like, yeah, that's the trend. And typically after that, it's over. Because everybody's like, yeah, that was just epic. It hit the top of the channel. It hit everybody's overbought indicators. People are cashing out using overbought to get out of their longs. And so the whole thing turns there. It's the end of the day, the end of the week, the end of the month, the end of the year. And then it goes back to this, it's just going to dick around for like hours and days now. So after a big glorious move, you go back to business as usual. Very boring. That's just like most relationships, you know. You have this honeymoon phase. Next thing you know, you're like, you're kind of you're kind of annoying me now. Now my new skill is trying to not let you annoy me. And that because the market's annoying because after this big, amazing move, it just does nothing. I might have one more burst left in it. Turns out that she's got a sister. So there's always that. So, but for the most part, that's why it's very difficult because I don't think a lot of people want to get in. Or if they get in after the big move, and they're like, "Well, it's not moving. What happened? I mean, we got in, volume was up, confirmation. We got in. Now it's like that's it." And of course, with the really wide stop version of that, yeah, well, now you're just, you're in. Sure, you're going to get fucked for like a day or two, but in about 5 days, you'll be making money. But that would be your signal service where somebody gives you a 100 pip stop, which means they're saying, yeah, we're going to get in. You might pull back 15 or 35 pips, but, you're in. But if you got in and you left a little bit on the side, maybe 2 more bullets, and you say, okay, you know what? I'm just going to, if that's the case, then I accept it. I got in late. I chased it. I'm just going to buy some more on limits and see what happens. And this is where it's tough because you're losing on your market order that you got in too early. And now you're going to add to that? Never add to a loser. You're not supposed to add to a loser. But in this situation, if you're going to scale in and out of things, it's inherent that you're going to have to add to a loser because you're just a loser from the moment go. You can't. The beauty of this system is that it's not like you think you're going to win. So there's no pressure. You're going to lose as soon as you pull the trigger at the market. It's just getting that to a 1K. So then you're very little bit of a loser, but you're saying, I think it's going to go higher. And I accept that this will be not the best trade in the world. And how many more of these can I buy lower? Do I wait for it to go lower? Is it going to go lower? And if I'm going to wait for it to go lower, do I just stare at the market for like 10 hours a day waiting for a better price? Well, you could, and then you'd have a better feel for it because as it dropped, if it dropped really hard, you'd be like, oh yeah, boom. You would buy that in a second because if your limits haven't been hit yet and you go, oh, I'm not even in the market. I got limits sitting 25 pips deep and I'm like waiting for it to sell off. And as soon as I see a big fat sell off at the top of the hour or something, news comes out, let me just buy one right there, boom. And then have them stream down there. So if it's going to be a great retracement, it's going to be a great sell-off. You're expecting it to do a double bottom, triple bottom. You're expecting it to keep going lower and taking out lows from days, weeks back. And you're like, yeah, it's coming into my entry zone. And I know I have to dump some of this. I can't ride the whole thing. I'm getting a nice rally here now. So you can't ride the whole thing because it's just too much. The position may be too big to withstand, right? So if you scalped around it and you made your 8 and 40 pips or 8 and 20 pips, there's no real, it's not a very stressful trade after that. So at any point you could actually get out. Say trade's not going anywhere. You could close all open and pendings. You could. I couldn't, but you could maybe. I just stay in the trade. Win, lose, or draw. Now, I did move my stops. On that last setup, I did move my stops, so I kind of hedged out of that. I actually did move my stubs. Don't normally do that. But I did move my take profits too. So I've been moving my take profits for 2 days now, way up there. So the longer that we spend trapped under the floor here, the more I'm like, okay. And now I'm just not going to touch the trade. I'm not going to add to it, nothing, because it's just a swing trade. And this way I don't have to. I would buy on limits though. So if the market went up 20 pips, I'd probably start putting in like the 10 pip deep limits, and I would add to this position like that. Now I could have bought 2 hours ago. I thought, this is going to be easy 20 pips. I could buy on that shallow pullback of the 4 hour, and I'd just come in and go boom, boom. And right now I'd be up 20 pips. I thought, no. If they go up 40, I'll just come in with limits and buy on pullbacks then and make those the scalps. So, but that's just you could do it either way. So there's no one way to do it. It's like you're picking the guitar. You could pick with your fingers, or you could use a guitar pick and you could sweep it, So you could, in fact, you could dump everything right now. You could get out of the whole trade and come in with very shallow limits and say, rebuild that. But now you got to rebuy the spread and the commissions. And what is that costing you? It's all these considerations, because if you're just trying to make 20 pips with a 10 pip stop on average, maybe a 13 to make 18, a 12 to make 20, all that stuff, and you just made a chunk of money, and you're like, well, that's great. Now we're done with the day. We don't have to worry about it. But if you're going to ride the big giant swing with the 50 pip stops, and you could still scalp around that position, it could be a buy or a sell, right? Something you're just waiting for the market to make its move. And that's the thing, is it's 2 days here, and then Christmas is off, and it's just disturbing that they have these holidays. But it actually creates the better setup, because you can see the complete futility of the bears, even with the low liquidity kind of insanity you can get, which I think is going to, all of a sudden the volume is going to come in here at the end of the year, can drive the euro through the roof, taking out the high of this week, what's left of it, and last week, and just go screaming north into Monday, Tuesday. I figure what's last day? Tuesday. Maybe it's just barely drifting at that point. So a lot of pounce and then drift maybe into that. Then everything closes out. And then you come into the next year. Wow, it's going to be crazy. Because at that point, if I'm flat into the end of the year, then I'm going to come in with limits all over again, because it's just so easy. I just have written so many buy limits that I can buy all day long. If it's tanking, it's the rate of tank and how thick the tickets are in there. So it's really like catching different velocities of falling knives, and you have a different array for a faster velocity than you have for a slow one. And the slow one you can buy at the market with a tight stop in a slow market, or sell with a tight stop in a slow market. When the market heats up, you're just forced to go and risk a wider, to survive what you consider to be the final destination or the swing. You have to put in the wider stop. You have to regulate that. But you could be a swing trader and not really sweat it too much. Now, a scalper would have to be worried about, okay, news is coming out, we could scalp this news in a burst and just, we're out. We got in, and I'm still want to try this at the market thing. So on the demo, I have to put in buy and sell at the market, and just go put in really great ratios, 3-1 or better, 4-1, 5-1, 6-1. And when the market's dead, build a hedge there, lose a leg, and see how much money it makes. On that one, I'd actually have to have it so that the account would be just for that purpose, and then it would just close all open, and there wouldn't be any open or pending. See, this is another thing: is if you get in at the market, long and short, at the same time, then you would really want to do that when the market's not going anywhere. And then when the market takes off, it's how far does it go? And if your exits are tuned to that expansion, whether it's 20 or 30 or 40 pips, then you would say close all open and pendings, or close all open orders. Because price pulse is over. That's as good as it's going to get. Just get out of everything. And you could be a person that just says, oh, I'm waiting for a dead market. I'm just going to hedge. As soon as it explodes, I just get out of everything. If I'm up 20%, great. If I'm up 40%, great. It'd be an interesting thing. Of course, you would know Asia would be the place to build that. And maybe 3 hours into the Asian session there, it moves and people are like, that's it, we're done. Here, I look at it structurally and I'm like, no, this is definitely like I'm holding this trade. So the scalpers have already made their money here. And now it's just a matter of cutting into that yellow pocket on the 4 hour. And after that, we'll be up 20 pips and maybe we'll cash out. I don't know how much. So that's another 20 pips, so that's another couple $1,000. So we just let that go. Now, the other option is to start to trail the stops. So you cannot lose. Even if they come back and smash me out, so I can move them to the very top ticket break even or better, and that way it's kind of like no matter what happens. And if that's the case, if I was to do that, I'm going to put limits in. After they stop me out, I'm going to put limits in to buy another plunge because I figure, well, if that's the case, and they do come all the way back and they cash me out and I retain my equity there, I'm going to do the same trade plan over again anyways. Buy limits beneath. So always putting a buy limits stream beneath me and sell limits above if I was going to do that, if I was going to be a seller. But like I said, it wouldn't matter too much because at some point it's going to retrace. So even if it's on the 15-minute chart, and if the market's collapsing into 5-year, 6-year, 7-year, 8-year lows, and you see 20-year low down that you're near, yeah, you could take that out, and it wouldn't make a difference in the world of what you saw. In other words, your 15-minute chart may be the only place that you could sell into that. I'm sure that if you looked at a 2-minute, like a 5-second chart of the collapse on the most liquid broker of the Swiss franc, you'd say, oh, look at this. Put a 20 EMA on the 2-second chart. I can see this great entry. Maybe it's possible with the broker that has enough volume that reveals that trade. Sure, you would say, who could trade that? Like I built an algorithm for that, just for that moment. If that ever happens again, I'm ready. But see, of course, then the question is, you think your broker is going to execute that trade for you? Are you kidding me? Right? So you may have this amazing algo that this thing, yeah, but, come on. Sure, when it's playing back the market data, execution is never a problem. But in the real world, you can't expect this thing to buy at the market, and chase it. And just keep martingaling in at the market, because what if it's not getting in and it's getting slippage? Then for sure have a bad connection. Everybody's doing that trade. When the news comes out, there's gaps in the markets because it's just moving too fast for anybody to really update it. And like I said, the people that sell limits up on that pound, if you had the balls to put sell limits up into those ledges on the pound, you were just like a genius. You were up for 500 pips with a 300 pip stop. You'd have to adjust your whole risk dollar trade plan, extreme adjustments in your trade plan for these zones and pockets. Are potentially going to get crushed into. And these zones we go in and out of, it's just amazing. And the future's kind of unwritten there. So, but yes, gold. The big footstamps on the world is really palladium going nuts. If gold plays catch up and takes out $2,000 for the next 4 years of Trump, at the end of Trump's administration, yeah, they'll basically tell people the reason why there's so much inflation because he basically created a money flow, cash flow. Velocity of money went up because people are like, oh, we're gonna take the people that are selling gold at 2,000. They're gonna go buy themselves a yacht or whatever. All of a sudden, people making yachts, that's gonna go up, and next thing you know, those people are gonna need sneakers, and they're gonna need, all the things that go along with laces for the sneakers and all that stuff. So that whole cascading thing, and I figured that it'll be the roaring 20s in the sense that people would be like, you can do no wrong. Of course, there would be a reckoning. Something's going to get out of balance. Some market's going to get overextended. And if there's people on that train, they're going to get hurt, And it's so cute that this no-nonsense guy is trying to give people a heads up. Well, you got to have, diversification stuff, and we have these, and we have those, and those, and these, and yeah, that's great, man. But it's just so I still don't understand the point of his thing. It's kind of like why does he call it no-nonsense forex? I mean, if he's not a forex trader, really, he's got all these other side gigs, and I don't know. It's bizarre. It's just still can't believe people fall for this stuff like Scientology. Our leader wouldn't, and this one guy that's in this Firewire guy's like, well, that's just, you take that somewhere else, buddy. That kind of talking about, we don't talk yoga or nothing here. This isn't like some Buddhist temple. Like, you take that somewhere else. No Zen trading here, buddy. I suppose you're just staring at the charts all day, is you? Yeah, these guys are like, the no-nonsense way, like, you gotta have your no-nonsense cereal. Yep, you gotta have the checklist, man. So we're holding on to this trade. We're coming into 11:30 Eastern Standard Time. It's the end of the year, man. Like, people are gonna be popping corks for this euro as we stampede up. That's gonna be 80 pips. 80 pips by tomorrow night. It's going to be less than 24 hours of trading left. So we got to get this trade done. We want to be screaming into the 1250 by New Year's. So basically 130 pips by New Year's, maybe. Most of this is going to happen by Friday. Maybe there's some drift up on Monday and Tuesday. That's my forecast. My end of the year forecast for all the all the institutions. And this is a message going out. It's all the bankers that have manipulated the market up and down and just, that's what they do. They let you have a little bit of money. Next thing you know, they're stopping you out. It's just not fair, I mean, they know I'm using the 20 EMA. They know that I know that they know that I'm using the 20 EMA. And I see them at the restaurants. They look over their shoulder at me and they know that I'm using a linear weighted 20 moving average, not an EMA. And I think that when they get back to their office, they somehow stole my algorithm. Maybe they could just read it on me. They saw how I ordered my food and everything. They're like, yeah, I bet he's using a 20 EMA, but I bet it's got to be weighted because look at this guy. Look what he's ordering for dinner. He can even speak another language and stuff. It's amazing. The no nonsense way. So yeah, it's a real love hate relationship, I suppose. Because the fast money, everybody loves fast money. Oh gosh, look, we just made the 20 pips in an hour. Then there's the slow money, and then there's the you don't care how if it takes 3 days, right? So you can definitely make your 150 pips if you're trying to make all this big money. Yeah, you're gonna have to be in there for maybe 3 screaming days of the market. But all that pent up, the cause for that 3 day scream has got to be maybe 5 days of bullshit, maybe 15 days of just choppy noise that doesn't really have a so-called setup in it or even a signal on any type of moving average, because your moving averages during that phase would be all crisscrossing and giving you like fake this and oh, it's just not a very good and the volume's not big enough. So yeah, people are in on these big moves. Yeah, the market makes a big move and you get in, and if you can ride that wave, yeah, you're a no-nonsense trader. But all this chop and all this noise is tradable if you have a trade system or trade value you put on the stops that fits into that slot. It has to fit in the slot of the hole that you're trading into or out of or around. And otherwise, this kind of fundamental view, which is a big directional view, which allows for apparently being wrong by 100, 200, 300 pips. Because the fundamentals will say, see, it took a few weeks for the fundamentals to hit the market, but see, the market woke up to what we all knew was true. In reality, therefore, this, that, and the other thing, okay? Yeah, and that argument can be made just like you could say, look, every time I pray, the sun comes up. I pray every day. I mean, obviously, dude, get a clue, I'm making the sun go up because I'm praying. Now, you could have that idea, and you could get away with that in the market. Some guy would say, well, look at this motherfucker trade. Every time he believes it's going to go up, it goes up. It's nuts. But, and what is it going up? Did it go up 2 pips? See, I'm right. Went up 20 pips, I'm righter. So how right are you? Because if you're right by 1,000 pips, even though you were 200 pips against you, like, dude, I got to make 1,000 pips on that trade. The 200 pips stop. One trade. One good trade. That guy that wrote the book, one good trade. I'm like, I'm going to need a bunch of good trades, or a bunch of like half-ass trades that most of them are good. So I'm just taking pictures like a photographer. I'm not expecting all my pictures to be great. So I'm just running a roll and just go, well, I'm being more, you could run a roll now digitally, but in the old days, you would just try to be selective and go, I'll take a picture here, take a picture there. Maybe 3 angles. I'm not going to get carried away. 3 angles on a picture means that's like 3 trades. I'll get a tight stop, wide stop, medium stop. 3 different prices, 3 different targets. You're doing pretty good then because now you've spread your risk. Maybe this is the winning trade. Maybe this one trade here is the winning trade, and maybe it's okay that you get out here and say, well, I'm a scalper. I just made fucking $3,000. I'm okay. Now you'll look back in the chart and say, oh, shit, if I held that, I would have made $10,000. $10,000. That's buy and hold. That's, let your profits run theory. Yeah, I got it. But, it's going to come down to how much money you make. And I think, I don't know who's looking at the percentages. I think if you go to the restaurant, they don't say, well, this is a 10% restaurant. 10% of your income goes into your meal here. No, people are like, what's the prices at this restaurant? Is it $50 for entree or is it $200? How much are they charging? So I don't think people do percentages like that. So this 2% of my account stuff just cracks me up. Like, what is that number? Somebody told me that number was. I go, well, it's not going to work. I'm not risking $10. I'm risking like $500, whatever that is. How much ever money I need in the account for that? But in my opinion, you only need about $2,000 to risk 500. So I guess I'm risking 25% of the account. There, I said it. I'm going to risk about 25% of the account. Okay. Since I know I can make $2,000, so and then I would just do it again. So just do it over and over again. That's all. I just go, yeah, I know it's going to take me about 18 hours to make $2,000. It's going to take me 18 days to make $2,000, whatever. Once you've made enough money, you don't really have to trade too much. If the idea was to make money so you could relax, then it's different than if you're making money because you think that if you just keep making $10,000 a day, that somehow it's going to be that's even easy to do because the market's not always moving at $10,000 a day. That's well, but why kill yourself, right? Why work so hard? You know the move's over. You know that it's going to go sideways. Why would you even bother holding onto that position or trying to trade that really super dead market, right? If you're not building a position during that phase there, I can't justify what market's dead. Am I really going to try to make like 8 pips? Maybe. But at that point, you got to start trading really heavy to justify that also. So all these things you do, if they're labor intensive, you're trying to get supposedly trading, you're trying to get away from dangerous back-breaking work. Say that you're doing really dangerous outdoor work and you want to trade because you don't want to, you're like, I'd rather just make money without killing myself. Yeah, it's different, but it's a different thing because you have to have a punching bag. If you get frustrated with the trade, you need some kind of outlet. Like maybe you beat your wife. I'm not saying you do, but or you just verbally abuse her. Whatever it is, right? My buddy, my tequila buddy, if he was trading, he was just your classic, like absolutely the worst trade, the worst kind of dealing with the stress of it, so he's lashing out at his family. I never should have let him trade, honestly. Felt like he's not a good candidate, so I thought that it's like Biden running for president, He's talking about molesting girls at the pool. So it's just not good, right? It's not a good look. But yeah, that kind of stuff, and people really don't have like a tolerance for, they're so careful with their money. And in some regards, some people are, but, it's just funny how the whole idea of trading is a kind of a dark side to it also, because people do say, well, the movies and all this stuff. But that much money, I don't know if it really matters. I don't know. I guess when you reach a certain threshold, yeah, I guess the fun of making the money, right? Because it's not like you could spend it. Like if you have, I don't think Bill Gates is thinking, yeah, I got to start going after my bucket list here. What else can I blow some money on? What kind of things can I buy? But, you buy that stuff, and of course, the novelty wears off just like a bad relationship. Next thing you know, hey, you got to get some better clothes. We got to get you an outfit, some leather. You are so boring. You look at Starbucks, though. The dress code at Starbucks, the women, this one girl comes in the morning with like she's going to dance. Like I'm expecting her to just start dancing on a table at any moment. This is a pole dancing outfit she wears for coffee in the morning. What's going on? So I never really say anything like, hello, like, could you put some, like, man, aren't you catching a chill? Aren't you cold? So offer one of those weighted blankets. Here, lay down. Let me show you something. This is a weighted blanket I just picked up. So I'm waiting for this big explosive rally here. So we're right at the core of this yellow line of scrimmage, waiting to clean house here on the stops. I'm gonna go bear hunting. So my last bear hunt only lasted 20 pips. So last video I did, we got a 20 pip bear hunt, and that was all. We came up into this floor here, and it fizzled out. So this is all we experienced. This is why you have to scalp this right there. That was the only scalp. Now that it went deeper, I was like, oh yeah, we're buying a lot down there. So, and this is kind of what I learned from anger trading. Is that when the market goes against me, I just get in bigger and I get in heavier. And I'm like, fuck that. Fuck these bears. Fuck them. And I just load up down at the bottom. And then the discipline is just not to touch it really, because if you add to it, like you could have added to it earlier, but I didn't on that other pullback because I thought, no, because you could have it. We could keep tanking, and we could also get a quadruple bottom. So gauging how much powder you have, but when I saw the sell-off on the daily, I thought, no, that is like a great pullback on the daily. It's the biggest sell-off on the daily chart in a long time. It was a classic Friday. I'm not saying every Friday it sells off is a time to buy. But Jesus, this time it was just classic. And it actually started to retrace before the close, which is pretty amazing. A lot of times it'll sell off on Friday. It'll never come up off the mat. It just literally, and then it'll actually gap down a little bit on Sunday. And you would buy that too, because that's even a better trade, because it's so deep discount. But yeah, this is hard to buy down here. I know people don't want to buy these big sell-offs because they're afraid it's going to keep going down, and it could keep going down. It is totally possible. But, it's just one of these things where I think if you don't mind seeing a negative the trade being against you, then the swing trading is for you, because it doesn't matter to you that you're underwater, so to speak, that your initial entry sucked and that, okay, they stopped you out of 50 tickets. So I really get offended when they stop me out of any tickets, because I feel like, oh, I've kind of didn't get a good entry there. I shouldn't have that happen because I'm trying to give a tight enough stop that I don't want to lose too much, and I have my wide stops in there. But they'll take out my tight stops, and I'm like, equity-wise, I don't notice it, but I still notice the lack of usage margin. I want to use as much margin when I think it's the best time to be loaded up for the scalp, and then even for the swing. If I can be in maximum half the thing's margin, then I'm like, as soon as then 3 days we'll make so much money, we can just go back to trading little baby 20 pip slams that happen in a 4-hour world. So it's these two different worlds. There's these giant crushing retracements, and there's people trading the event as a trend as it retraces. And there's people holding through the whole engulf retracement, the whole auction. So I want to be holding through the whole auction sometimes, because it's obvious that that's what's going on. That's what needs to be done. And then once that's done, we're just done, And then we come back. I do come back in with the closer to the market and higher probability of filling those tickets, though, right? So it's like, here comes the next session. It's going to start out, it's going to go up and down, but it's going to start out gently. It's going to heat up. And if I stand in front of it, if I'm not short and I want to sell, like here I'd sell. If I was a seller, I'd start putting sell limits in now, 10 pips apart right now as it goes up. Because I'm thinking, this looks like it's going to spike up, and I want to capture that spike on sell limits, and that, to me, that's a strategy. For me, I'm not going to, I could see this going up, but I'm not going to buy it. I'm not going to buy it. I'm not going to add to this because it's a swing trade. I already scalped enough at the bottom. So I'm not going to. There's another money management discretion thing. I don't have a robot trailing my stops, and I also don't have a robot front running the targets in, say, 20 to 30 pips out in front, optimal kind of thing. And that would be optimal. Like if it spikes up all of a sudden 30 pips here, yeah, get out. But if you're going to sit here until the United States opens in about 6 hours, well, we had that 6:30 in the morning thing coming, like 6 hours, 8 hours. Then in 8 hours, we could go up 60 pips in 8 hours. That's not that hard to do. That big sell-off there was 50 pips in 8 hours on Friday. Thursday going into Friday there. So that one big sell-off that you could have got in a breakout, that big down move there. I'm looking at a different screen when I'm talking, but this big sell-off here, yeah, that was premium, one and done, and that actually reversed there pretty cleanly. Retested that two more times and kind of retested. But the rate of those sell-offs, so that 4-hour sell-off on that next bottom here, buying this one would have been probably the best place to get in because it was fast down. It was retesting a low. This is really simple things. This is not some complicated world of. I know people want to make this complicated. It's not. It's like that white line is drawn every 4 hours. If it goes up at 4 hours, you have a big up line. Down at 4 hours, a big down line. 20 pips. So you can see here, I mean, 20 pips in 4 hours. Well, on this chart here, it's different. This is the 50 pip chart that's shown on the video, but so we're right now at the 20-yard line. To make it to the 40-yard line here is going to be coming up into that yellow cup area. This is the old cup and handle here. There's the cup. Actually, it's the rim. This would be a rim job here. We want to spike it up there, clean that out, pop above this Williams fractal here, and then we expect to pull back. That's why I'm not going to add, because I don't want to get trapped. It's too late to buy. You buy now, you're going to ride that margin back. So I'd rather let it spike it up 40 pips, come in with limits, and capture a pullback and add to it in that regard, because if they never pull it back, then we're never exposing ourselves. Overexposing is too late to buy now, in my opinion, so I don't chase. Because I loaded up so heavy at the bottom there. And my target is so wide that I'm really saying, sure, take it up 40 pips and I'll buy 10 to 20 pip pullbacks if you take it up 40. But other than that, forget about it. Because that way, if they pull it back, they'd have to, for me to get crushed. Now, if I never move my stops up, that's different too. If I never move my take profits, my protection right now, which I haven't, I'm saying, I really think this trade's going to work out. And especially if I move my targets up, I'm like, oh no, we're going to the moon. And of course, that's without even adding anything, putting any more limits or any more market orders in, just managing the way it is now. That's a whole deal. And so to be on the safe side, people would move up their targets so that no matter what happened, they made some kind of money here. It's kind of like I guess what you perceive is going to happen. And of course, in the next 2 hours, so they're going to come into the kind of the big end of the week opening of London now. After Christmas kind of put a hole in the middle of the week, it's kind of really screwed it up there. And it wasn't very violent at all. I mean, it's a pretty tame markets. There's been times when you go into Christmas and it's just vicious. And I guess this is kind of a fast, hard down move, double bottom, and kind of a fast, hard up move. And right now we're at the apex of that triangle at 21, at 1121, 1119 here. So we're all the way back to this thing. I suspect a lot of people will be cashing out here. And then you could come back to here. That's why I wouldn't add now, because if we come back to here, I don't want to have to, or if we only make it back to here, I don't want to have to think about it. There's not a lot of set it and forget it trades in this market, because if you're in the scalp world, then you're trying to make those 10 to 20 pips and you're out. If you're going to ride these 80, 160 pip moves, then really, that's going to take some time. And that rarely happens. Those kind of moves rarely happen. So we're just going to have to wait for this to, we got 8 minutes left before midnight. And that's going to be a big deal. So this 8-minute window, and we could get a panic up move here. So I'm going to come back right at midnight here. Take a look at it. I got 20 seconds left here. Before midnight, I'm expecting an explosion here to the upside. Coming into Europe Open, a big screaming up move. Blowing out the bears. There you go, it's midnight. And 20 pips here, and then 40 sellers coming in anywhere above this 40 level. And then, yeah, for the people that are going to ride this until through the weekend, it's different than, like I said, if you're just waiting for tomorrow, Friday, wherever the price is there, just take whatever you can get and run. You can't always make this target that you're looking for, even if you do the math. Sometimes the market doesn't do it. And then the surprise is that the market has to make up for lost time, and there's kind of a after the consolidation, there was this big move. So I think the consolidation is that walk down, and then the final price pulse here is going to be up. So it should be nice and violent. And that's the trade tonight. Riding this thing up to take out the high of the Brexit, really. That's my target up here. I'll settle for this by by the end of the day tomorrow. Can't be too picky. Can't be too greedy, so to speak. So yeah, not every trade is, it really depends on how much money you've got at risk here, or in this trade. And what's your timeline for that? course, if you're sleeping right now, you wouldn't notice it. You wake up and hopefully you're up at this price here. 50-yard line here, 30 pips to go. This big black line is the 100. So I put my targets up there right in the retesting this double top way the hell back. I might be asking a lot in one day. Since that's the daily chart, I'm actually asking the market to go boom, 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 boom. But it's not like it hasn't happened. Look at this one. I mean, that's a nice move. It did take a few days. Like I said, the end of by New Year's up here. That's my inappropriate prediction.